Welcome back to Chapter 21. Chapter 21, my goodness, I don't even know what I'm doing here. We are on page 6 doing Part B of Example 2. So, continuing on, assume that in 2023, PACE, which had been using LIFO since incorporation. So, you know what? Just pretend it was okay to use LIFO. Change to the FIFO cost formula in order to comply with CPA Canada Handbook. Well, I suppose you could also say it's an error. Either way, this is going to be a change in accounting policy that's involuntary, or it's going to be an error. They've been using LIFO for 3 years because they didn't realize you can't use it in Canada. Maybe their bookkeeper came up from the US and thought you used it. Either way, both of those are retrospective. So now it tells you when it's something like this, something weird like this, usually they'll tell you they apply the new policy retrospectively if it's a new requirement. Prepares a necessary journal entry for the change, ignoring the effects of income tax. Okay, so going back to the original stuff, 5. This time, LIFO to FIFO. So Part B is LIFO to FIFO. So we need to know how much the net income is there, and you total that up and you get 65,000. So the difference here between the net income, between LIFO that you're switching to FIFO, we again have an increase in income of 19,000 between LIFO and FIFO. So back on page 6, we need to record. So we need to be retrospective, increase in prior net income by 19,000. So we adjust retained earnings. So credit retained earnings because it's up. If it was decreasing, if we were switching from FIFO to LIFO, then of course this would be a debit because retained earnings would be going down. 19,000 and debit inventory for the 19,000. So higher cost of inventory. Okay. And again, if there was taxes, you would do the same kind of thing up there if indeed CRA allowed LIFO. Now, the important is, I just want to mention about disclosure. You would disclose a new method was required by the CPCA handbook, and then you'd present comparative statements. Again, the original, the change, and the revised, something like that. Now, you notice on page 10, this was optional. It will just depend on what your company's previous statements have looked like when they've made changes. You'll have, almost every company has at least, well, a handful. Okay. And you would show this for all 3 years so that people would know. Now, even if it was an error, same thing if error, except you would say this was an error. Okay, so that was Part B. Again, if you've got any questions on this, you guys, just email me. It can hurt your head a little bit, but I have a feeling you guys will get through it. Okay, I'm going to end the video so that I can have a clean video for example 3.